many quoted companies, stockbroking firms, asset management companies, and high net worth investors. Yeah, he's a confident team leader with effective relationship management. He's also a financial journalist. He's been on OGTV channels, the likes, and he's also a guest, for equity and financial analysts on radio and television. So let's welcome Mr. Ambrose. I'm sure we'll learn a lot from him. Thank you.
Yeah, thank you, Mr. Ibuku, and all in the house. Good evening to you all. Yes, like the two speakers also introduced and the purpose of the meeting and also your own goal as a NGO or what I call it. But the good thing is that I always tell people in life, once you are focused on a thing, you'll get it. I remember when I traveled for a training in UK, there was a trainer that came to the class that he didn't just do anything. He just draw a circle in four places. He said, in life, we have the bigger circle, the smaller circle. See that like that tiny one. He said, if you focus on that tiny one and you start hitting it, then you make a goal. That is in life. Once you are focused on what you are doing, you achieve results. So also in equity investment, in any form of investment you want to do. But we and myself, I know my area of position is in equity investment because I've done it for several years, and that has also given me an experience. And also, when I advise with not just as armchair researcher at either stock broking firm, because I'm also playing the market with my own money. That when I lost, I will tell you that this is what is paying me, and that is why my analysis and my advice will come because I'm not just telling you to go and act that acting. I mean, whatever we are discussing or going to share here is an experience that I have used my own money also to practice, and I've you did something to me. At the end of the day, today I'm better off. Like Ibuku have just said, I started invest data in 2012. I'll tell you from that date, we have moved from, how will I say it? I don't know how to describe it, but I think let God take all the glory. But for today, the path to wealth creation through stock market, do's and don'ts. In anything you are doing in life, there's always a principle and there's a guide. Once you follow that guide, you will achieve results. But in equity market, most people come to the point because they are friends in the market or because somebody say, oh, the market is going up, just jump in. At that time, you are just going to the market without knowledge, without information, without guide. But before you take the shot that you want to go into any investment, in anything you want to do in life, even in trade, you need to have a plan. You need to have to know what you're going to achieve there. You have a goal. And that is why when I saw this topic, I was really impressed, and I was okay, let's go and discuss it, and let people also know how to take advantage of what they are doing and what they have. I know that in equity investment, before you go and start borrowing money to invest, you will have gathered experience on your bet, and also you have used your money to also play to see how it works before you can borrow money. I'll tell you when the interest rate was low, we are part of it that borrow money and we made money because of. But now that CBN and through MPR have taken it to a level, say let's slow down. Not because they don't know what to do, because of the rate is high. That's why once you have knowledge in what you are doing, you can go all the way to just to take borrow and invest. But at this stage you are starting. But I know that there are many experienced ones in the class, but I'm coming that way so that we'll have a foundation to move with, so that to guide our discussion tonight. Yes, when it comes to equity investment, many people think that stock market is risk, and because it's risk, they want to avoid the stock market position. But I'll say that because I say no to that because there's a lot of winning opportunity in equity investment. But once you are not a design investor or you are not just a design trader, this opportunity you miss it. But for those that really want to win in the market, they must understand the dynamics of the market, and also they must also prepare their mind to trade what the goal they want to achieve. And that is why I tell you that in any situation of the market, now I think globally, I think that there is some of troublous time across the globe. People are wondering how they're going to survive. I'll tell you, in this same situation, there's opportunity to make money. And that's why I said, the winning opportunity in equity market have not stopped for design investors and investors who understand the dynamics of investing in stock. Period. Because if you understand whether the market is volatile, there is a down market, the economy is in boom or in gloomy situation, there is opportunity there because not every sector, not every company that thing will go down at once. And not everybody will also go up when the market is in a bullish position. That means once you understand the terrain, once you understand the dynamics of the market, you know what to do per time. And that will go a long way to help you to know what to do at that particular time. That's why now that elections are around the corner, people are panicking and they are saying there's no need to panicking. We have seen no elections in Nigeria come and go. That means you as investor, you should know that during the election there's another type of investment you should adopt. During a boom, another investment. During a bear market, another investment. So during the time of economic boom or economic boom, there's different way to invest. But once you understand it, that means these circles you are seeing, you have to go with the circle. Because there's always a circle. The circle in the economy, circle in the market. Circle they don't mean economy. You can see there's a time for economic expansion, economic contraction. In the economic market, there's also a time for economic market boom, there's also a market downturn. Once you understand this circle, these two kind of this two sides of the coin, you always want to make information that will guide you. In creating wealth through the stock market, timing, news, information, physical policies here and there, monetary policy are very, very important. Why is it very important? Because they guide people's direction. The people react to all those news. That means there's a force behind all that this thing will trigger. But you as a trader or investor, because you know these things will come, you need to also to guide your decision at any given time. But most time, you don't want to trade only the news alone. When you trade the news alone, you are bound to get your figure bomb. Because more news might come and put you off. And things will come and put you in the right. That means for me, for you to trade the market, you must understand how to combine your fundamental and your technical analysis. And which I know that yes, people need to someone understand that what I mean by technical analysis and fundamental analysis. Fundamental analysis, look at the company's activities, look at their product line, all those stuff. Look at also the economy. But the technical tell you that what is the psychology of people in the market? People, you and I that are in this class now, we want to invest. How we react? Because the way you react, the way I react, the way Mr. Bukun react, the way Mr. Mike also react to be different. Is that reaction what technical analysis to take? The activities of the people, the psychology of the people, the sentiment of the people, but why the economic, of the nation, which is the fundamental, and also the company, are still there. And also, when I said that, I told that, the economy, the market, the sector has about 80% or 50% influence on prices. Why the company performance has those 20% influence is because all this is have a way of moving the price on the equity. Because this is a company that is listed, activities in the company will not directly come to you. But what they are doing in terms of numbers will influence that because this company is separate from the equity. Activities will influence the price of this company. That's why if you want to look at what is the company doing, but when we come to the do's and don'ts, we also want to discuss more on that. But one thing that is very, very important in equity is that before you go in, you must have what? You must have a set goal. That goal will guide you. You know kind of stock you buy, after how long you have to stay in position. Because if you have a fund that you want to use to pay rent, if you not put it in a market that you are not sure of, that will also put you in a tight corner. But if you have a free fund that you want to send an errand, let fund on the price of keeping it in this environment that we are seeing, fictional environment, that if I put it in fixed income market on the bank, at the end of the day, my money become useless because of all the money have lost value. Then you have to which stock will I enter to edge against inflation? These are the things that it is your goal that will guide you in doing all this. That's why goal is very, very important when you are investing. But for this purpose of this, presentation, we are looking at using the stock market to increase your income and grow your wealth. Well, fine. Also to avoid the big losses by knowing the do's and don'ts of the market. This is very the ups and downs of the market. You must understand it. Also understanding the factors shaping the global and domestic world economic space. These are the things that you know what is happening across the world as the world also influence our activities here. Today, the war that's going on in Ukraine and Russia is a kind of a pressure on the whole world. That's why fear of recession is here and there. And also geopolitical tension, either in form of election, people are the world with that form of election, or any form of activities that is going to threaten a company, a nation activities. These are also the geopolitical environment we are looking at. But the good thing is that all these things I'm saying, as the world also open our eyes as investors to see what to invest. Also, the aggressive monetary policy we are seeing tightening here and there. Like I think that the Bank of the World, the Central Bank of the World, they are the one that set the pace of any economy. And today, what is happening in Europe, what is happening in US and in Asia market, as the world of influencing the global world, even in Africa, because what happened in US, because Fed US is like a standard, is what the direction they go. All that Central Bank want to follow that direction. That's why I tell you that look at what is happening in China today and Japan. All that climate, all that nation are increasing their rate. But these two countries do not increase their rate because of their particular environment. But here in Nigeria, yes, because of we are not able to take good management of our own economic variables. that we are just following to increase the rate. Increasing rate is not going to help us. Yes, we know there is inflation in Nigeria, but because we want to do many things at a time, that's why on this kind of situation, instead of our our foreign exchange market and also the rate hike that will also have put us where we are. And also don't forget that the war has also kind of distorted a lot of supply chain of a lot of things, and that's also what will happen. But in this situation, there's also opportunity to make money. The global tension I've mentioned about the war, elections I've mentioned it. Then the high interest rate. This guy has also a way of impacting some sectors of the economy. Why some sector will be booming, will be complaining because of high interest rate. But naturally, there are sectors that will benefit from it. And how you as an investor, if you know that there's not going to be this rate hike, and if you know which sector you should be putting your eyes, you should be putting your money. And that is how you said, as the market is going around, the economy is going around, there's always opportunity in any situation. Because now that everybody is complaining, but there's a sector that benefit from the high in rate, while the other side of the economy are complaining. What do you do? Will you say because you are too good, because others are complaining, you now go and put your money in the sector that you know that this high interest rate will affect negatively? No, you move your fund to open up on a bit from the world for the high interest rate. That is how to invest. Even the yield market in the fixed income, yes, interest rate is going on, it's going to impact it positively. But compared to what is happening in inflation, is it where you're going to stay? Are you comfortable? What you're going to get from that fixed income instrument? You need to balance it. You know that mismatch of economic policies have also kept us where we are. So must not policies here and there for the economic managers. These are the things we know that also shape for the market situation. Mixed macroeconomic indices, we have seen it. We have seen that GDP has been on kind of a good direction, trajectory. We're moving on, but you can see that the growth is still very fragile. And also we are seeing that inflation is also on the rise. You can see also interest is on the rise. You can see that this is a mixed macroeconomic, this was or data. Why I say so? But if you're saying the economy is growing, data is fragile, but it's looking up. And you are saying this is why you need to understand and manage and balance which sectors of the economy that is supporting is contributing to that GDP growth. Is that where you should put your money? Because I know that anywhere in the world, once you are seeing the corporate action from the exchange, from the market, it tells you how the general economic GDP will be. For example, now we have seen the Q3 earnings from quoted companies in Nigeria. On that note, we have seen that yes, either we are going to have a kind of another growth in GDP, but it won't be as high as other. But we're not going to see that we are going to recession and immediately no, or we're going to see a decline in third quarter GDP. No, because the number that came from this federal sector that are listed on the stage, we see that most companies in that sector have done well. That means we're going to see our GDP also inching up a little again for today. We might start seeing a better equal become one, but I believe that figure that came to the market or the data that came to the market for company earnings and giving us an insight what we can expect from our GDP. Also, insecurity has not helped the matter. We know that many US insecurity, fear, investors will not come out fully to come invest, especially foreign investors, and election around the corner. These are the factors that are shaping the market as what we are seeing today for the economy. That means you as an investor, I also as a trader investor in the market, we need to balance our position and also take action immediately when we see opportunity. And also this is the time, not just because others are investing, you are investing. You know why you are in the market, and this I'm just explaining will guide you what to do as you go on, also be discussing them one after the other. In all this, however, there are investment opportunities for players. Players are you and I. So whether you are a PFAs, you are a retail investor, you are the high net investor, whether you are fund managers, who play in the same market. But the ability for you to take decision that when they meet you in the market and also benefit from their activity, because I call them all those PFAs as smart money or institutional investor. And when they come to the market, you feel their presence, you feel their impact. But you as an analyst or you as an investor or a trader that have taken decision before they enter the market, you are going to benefit from it. For example, now we have seen that since around May, June, we have seen that the institutional investor, the PFAs have slowed down investing in equity. Immediately, CBN start hiking rate in the month of May, around 24 May. They start to slow down and looking the world for a fixed income market. But because inflation continues to go in the up direction, the northward movement, it has also to slow down, at the time. Now they are holding cash to where is the next step to take. On this note, you and I, that those that are following us in our different fora where we discuss, we tell them that for you to benefit from it, you have to be in the market before these guys come back. Why are they coming back to the market? They have seen that now we're already in the more than the second half of the last quarter of the year, the fourth quarter. And between now and around April, is the earning season, payment season for most of the company. Even as to speak now, most of the company that pay their entry dividend for this December and for this November and December, no, they are still already in the market. But because there's no liquidity in the market, we're not seeing part of this dividend on them. But for the full year that are coming from February to May, most big PF want to position because most of the company on the exchange, because of the low price we're seeing now, has about 2 digit return in terms of dividend yield. And that also, those 50 companies that have been at 16%, for a whole year, that is for 12 months. But for this to make around 14% in dividend yield in less than 6 months, you see, they know that this is opportunity for them to make money in the equity market. That's why I said after the MPC meeting by next week, we expect to see most of these big fund managers or investors coming back to the market, to take position, because we are seeing that most companies on exchange has given opportunity that their payout is going to be better than what they did last year, because the Q3 number that just came in around the end of around the October, I reviewed that the position of these companies. For me, we don't need to fear at all, but rather to take advantage of this opportunity that is in the market. There are sectors that are today benefiting from the Ukraine war, which we all know. The Ukraine war has made some oil sector and energy sector to post kind of impressive number from the time that in February till now. And those sectors are still good. That's why the oscillation in crude oil price and all those stuff. Energy companies and oil related companies, they are still posting positive number. At the end of the day, that number will go to impact what they're going to pay out and their price. That means you can see the war is happening somewhere, and other countries where they are selling war equipment for this war that's going on. They are supplying ammunition and all those stuff. But here we are not involved in that, so don't put them jump on. But the oil sector is what we're playing, because what is happening in Ukraine and Russia, crude oil prices are remaining bit above $90. That's why it was late to around 80, 85, 87, 89. They also came back to around that 90, 95, 96. No, but I believe that before the end of the year, we're going to see oil above 120 again. It tells you that this is what benefiting from this sector. As I said, there are sectors that are also today benefiting from what is happening in Ukraine. Also, the high interest rates regime we are seeing now. There are companies also sectors that benefit from it. I would say that our banking sector has shown resilient in terms of performance, because this rate hike has also supported that sector. Now I see the data that came from the first year banks in Nigeria. People say continue, change that content is happening. Go and check all their net income interest has also improved. This tells you that this as a work also supporting them. You can see that they say that high interest rate is like a poison on the mouth, but there are some people who kind of benefit for that poison because of what it kind of impacting their sector positive. That's why company policy, government policies or regulatory policy, as they also supporting some sectors and industry. When it comes to this policy, but that's why you also must understand where is it the trend moving to when it comes to policy interpretation, who will benefit from it. These are the things that also guide us when we're. That's why I said there's still opportunity in this market, even at this point that people are afraid of election here and there. Like also, like I told them one of the meetings that we're having a economic reset or financial market reset in a moment from now, and that will come out from the first quarter of 2023. Why we do that reset? You can see what is happening in our foreign exchange market up and down. It's because of the new move to resign the naira. It's also threatening that space. People that are hiding money in their kitchen, in their toilet, in their bedroom, want to bring the money out. This as the also reflecting that once there's a reset, there will be a change in demand. And there's opportunity in that reset. That means you and I will take advantage of that opportunity. As we go, we're going to also see the opportunity that will also take advantage from this class. Companies that will grow their earnings in this face of this hyperinflation. Here, there are companies that are able to pass the high cost to their consumer because of the nature of their product. Now, as I said, which are these companies that are able to pass their high cost to their consumer? Because they are passing to their consumer, they've increased the price of their goods or services. That means their earnings will remain positive. You can see what is happening in the industrial goods, which is the building material sector. You see, they've increased their cement price for many times, and that also has been to post good earnings for this period. Despite the high inflation and people purchasing power coming down, but still because they are successfully push their cost towards the consumer. And because we're having infrastructural gap, there are a lot of activities going. Also, we're having accommodation problem here and there. That means there will be demand for their product and there will be construction. And for that, this company will be putting price number. Also, look at what is happening in agriculture sector, especially the palm oil market where we have Opomo and Presco. These companies, what is their price? Before now, they are selling below 18 naira, 16 naira. All of them are touch 200 and above now. Why? Because also they want to, to pass the cost, of their cost to their consumer, and they also move their price up. As at last year, a 35 gallon of palm oil is selling around the 12,000, 16,000. Now speak now 32, 30,000. I can see this company are also making. And not only that, the demand for palm oil is high. That's why you must understand, the kind of, the business model in the company you are investing. This I'm just giving you this so that you know. And that because they're able to pass this price to a consumer, they are putting good number, and that good number has supported this company to move from around 18 naira to, almost 230, 200 before the tax went down because of profit taking and also markdown. You can see how what is happening in the companies also are, impacting some sector positively. Companies with their earnings power, trending up, despite the prevailing economic reality, is where you and I should also be looking at, because most of them has what we call equalization in their policy in dividend. They are company that they pay dividend of 2 naira last year. This year they're going to pay 2 naira 20 kobo. That's what we call equalization, dividend policy. They make sure that every year they do their dividend either in the 20%, 15%, just to compensate their investor. That's why they have equalization dividend policy. They do it every year, especially those companies that their numbers are good. You can see how this opportunity are still there in the market for you. Stocks of well-managed companies with track record also have prospect of growth. It's also selling at a discount. These are also where you're looking at. For example, I'll tell you that stock like UCAP. UCAP in Nigeria, you can say that company is one of the most well-run companies in Nigeria. Why you say so? Go and look at their what we call the profit margin. The profit margin of all the listed companies on the market on the exchange today they are the highest, but about 52% profit margin. That means in every 1 naira they are getting as a revenue or gross earning, they are retaining about 52 kobo as profit. I'll tell you that tells that this company is well run. You should know that kind of company that they also pay a good dividend. Don't forget, UCAP is even paying more than his parent company, UBA. UCAP pay about 150 kobo last year because this company has earnings that will support what they pay out. This is how investors think. Investors are not doing that. I want to run to the market today. I want to go out tomorrow. Investors are where can I have consistent income and company that can sustain that, because it is when the company is making profit and also they can pay you, dividend. And don't forget that before now, when this inflation started, people are afraid that company on the exchange will start posting a negative number. I will tell you, despite the election around the corner, the inflation data, and also the prospect of future increase in rate hikes, companies on the exchange at the end of third quarter have posted impressive number, and that has supported the market not to go below this level of 43,000. When you go back to 44, from 55,000. For me, tell you that this earnings that came for third quarter was the savior of the market, and tell you that companies on the exchange has all it takes to give us a good payout at the end of the day. These are the things we should also be looking at as investors. Knowing the do's and don'ts is very, very important. Due to the high risk associated with stock market investing or trading, traders must understand the ups and downs of the market. This will help you to prepare
Yes.
for surprises and disappointment associated with investing in stocks. And these dooms that you need to know is one, and these are characteristics of what a good investor. You must start with what? Start with investing on time. Start investing on time with a plan. Even though you are starting late, start with plan. Once you have plan and you want to enter the market, that plan will guide. That is why you must start with plan. Stick to your plan. There are many people that today, once they don't have plan, they already plan to fail. Once you have a plan and stick to it, I'll tell you are going to succeed in the market, because you are changing your plan. You know when this plan is also not functioning well, you know how to amend it. But once you're able to do that, you are going to, even when the market looks very unfriendly at times, and you know your plan, you are sticking to your plan, I will tell you, you will survive. Why? Because you are in stock that your plan have guided you to take, and your trading objective. These are the good things that you should know. One again, another one you should know that investing is very, very important. Avoid to invest money that you need. People want to, like I said earlier, you want to pay rent, you want to pay school fees. You don't put such money into investment or to trade, because once that that money go the other way, you will sleep. You are going to affect your psychology. And that is why the surplus you have, money you have saved that you don't need, that is what you're going to invest. Once you're able to master the game of investing, become have the experience on your bed, you can now go ahead and borrow, but you must do something to know how to invest. That's why I said invest only what you can afford to lose. That's why you want to invest your surplus. You want the money to pay rent, not the money to pay school fees, not the money to take care of your home. You must set money aside to invest, but you must have a goal. And that goal also go to that. Understand the dynamics of the stock market, get education. This education is part of what you are doing today. so that you can also go and add to what you know already and take action. Because I know that we are not novice in the market. Once you know already and we are sharing, you look at it as okay, this is what I like. You take action. These are the indications, and also you can also read on your own, understand why the company function. Or these are the things you should know. You must know the business model of the company you are putting money. So that business model will help you to understand which season this company will do well or not. For example, you know that already in festive period, there are some companies in Nigeria today that will benefit more from the festive period. That means if you have seen their third quarter result before now, that their full year will be also better because this season, because there will be increased demand for their product because of consumption and festive period, this period. That will, that's why when you understand the company you are investing, their business model, it also helps you to know when you should expect a better number in terms of earnings that will support the price. Also, you must know your risk profile. If your age also come and play here, if you are age of 60, the kind of stock you should not play. But if you are starting, early as 20, there's kind of stock you play. Once you know your risk profile, also guide it. That's why I say you must have a plan. Start with a plan. That plan will know you. You know yourself. You know your risk tolerance you can take. Also, diversify your portfolio. But diversify your portfolio here, many people are taking it for granted that I say diversify your portfolio. You're not gonna have 20 stock in your portfolio. Like I don't tell people in my group that stick to what minimum of 4 stock and maximum of 8 stock. Having 20 stock in your portfolio, 40 stock, you are just wasting time. Once you have this, also most time again, when you over diversify your portfolio, it become a problem to you. That's why I said that diversify is for. That's why I have to give you example of what I mean by that. Not just having 100 stock in your portfolio because you want to attend the game meeting. No, you are there in the market for a purpose. That means you are trying to minimum of 4 and maximum of 5, and that is what you should do in your portfolio. Patience is one thing that is very important in equity investment. After you apply your fundamental analysis, your technical analysis, market will do what you want to do. But when you have patience, you're able to go with the market. But once you are the type that after putting more, the day you jump out from that position, it start going up, you'll be crying overnight. Why did I go out? It's because you do apply patience. That's why after using your fundamental, your technical analysis, and what attracted you are not disintegrating. They are still very, very much attached to that company. Patience is become very important key to apply there. Also, do your homework. Why do your homework? Not because you're first are investing. Even when I say buy stock, you have common sense to say this stock I'm buying, what are they into? What can I get from it? That's why you need to do your homework before you jump into any position. Also, these are the things you should know about the market. Also, the next one also that is very, very important. What you should avoid in the market. What you should avoid. Don't just follow bandwagon in the market. Don't set unrealistic expectation or plan when investing. Oh, you want to enter the market, I want to make 200% return. It's possible, but don't set unrealistic expectation. You can start, okay, let me I will make 50%, 20%, 18%. Gradually you can board. Say you enter the market, I want to make double my money in the next 1 week, in the next 1 year. Fine, it's possible, but set realistic what, not unrealistic what plans or expectation. You need to have this at the back of your mind. Don't invest based on what assumption. Also overconfident too. Assumption that this is what you must look at facts, look at the company fundamentals, look at the economy whether then don't join invest because of you are assuming. No, I tell you that personally I don't know, I'm not caring the name of a company, or the age of a company, or even whether it's managed by white or they have impact, but what matters is that whether it's managed by white or Nigeria, the age, the earnings is very important. That is what will move the price for you. Because a white man works in a company, that will start moving the price. No, it is what they get at the end of the day. That's why I said the impact of the management, their new product, introduction, all they are doing, technology, innovation, will reflect on the numbers of the company. That's why you should not invest in consumption of a company. You must see that fact before you jump into any position. It's very, very good. Don't follow bad background. I've said it earlier. Do not allow the market to toast you up and down. You must know why you are in the market and you stick to why you are in the market. Don't gamble with your hard-earned money. Many people are gambling. If you gamble wrong, you become poor. Like what happened this period now, because they said the dollar is going up. Some people rush to the market when the market is even bleeding to sell about a loss of 20%, 30%, 40% loss, and they move to speculate dollar. Not up to the entire dollar. Down they got almost 800 naira, 850, came down to around 6 before that come back up again. You can see you don't jump from fire pan to fire. What you do, if you understand the stock market, that's where you have knowledge. Play it understanding. Let's say that according to one of the veterans in the market, that we should know that when there's blood on the street in the market, that is where design investors should go and take the blood. But when there is greed in the market, that is where to sell. When there is fear, you start buying. But when people are fear, they are selling. Then at the beginning, that is time you should jump into the market. Once everybody is going, when the Akara woman on the street, when the mechanic are telling you that stock market is good, it's the time you should start running for that stock market. It has gotten to that peak. But when everybody is afraid, people are shaking. That is where you should come to position in the market. That means you must understand the market. They don't gamble with your hard-earned money. Don't invest on rumor. Yes, you can trade rumor at time, but don't invest on a rumor because that rumor didn't come. You are jumping, become a player. Most of the rumor might not come to be, but when it comes, fine. But that's why, as you are an investor, you are not a trader. Don't invest on a rumor because you need to know why. You also check the source of the information you are having. Where is the source? The reliable source is very very good. Don't panic when investing in stock. Don't panic. You can enter position today and market can go down. And what attracted that particular stock is still intact. Not because market is coming down, others are rushing down. You know why you are that stock. Then, unless the things have start changing, fine. And also don't forget that I say if you're setting your goal, you have a stop loss and all those stuff to guide you. But when it comes to equity investment, don't invest with panic. Don't panic in equity investment. Because if the day you are just jumping out, the start will start turning off. But if you understand that you don't panic in the equity market, it will go a long way to help you when you are taking your decision. Also, you want to look for quality or perfect stock at any given time that will help you to work to create that wealth you are looking for on the long run. And you want to target some companies. And these companies, I call them leaders, in their sector, leaders in cutting edge technology. Today, you can see the entrance of NTN and the Airtel to the market, what they have done to the market. When they came to the market, this kind of outperform the banking sector in terms of price, in terms of what earnings that are coming from them. Just coming newly, you saw what is happening at that sector. Look at those leaders in that sector, in this area, to look at and know that yes, today, I see that even there are some license that NTN is trying to like have a patent right on, so that they won't give such a license or such way to what to Airtel or Glo. You see, they are trying to build around their profit margin, what going to support their profit margin, and also they're also increasing their cash flow by investing in millions that also at the end of the day impact them. If you look at this kind of company, that's where you should be looking at your money. And don't forget that core data has come to stay because of what the changing world today, because of technology driven economy and everything. That means you should know what I'm saying and what to do in that regard. Companies with breakthrough products, companies that are producing products that will support their bottom line, that also boost their sales. As you are seeing those companies, that is where you should be looking in your eyes. Companies that with good profit margin, no profit margin are very strongly protected by patents and other things. You can see that profit margin is what will determine what they will pay you at the end of the day. For that, you must have no interest in those companies that have strong profit margin. Don't mention UCAP. Because if you come to the banking sector, despite today that GTP is selling at this price of 1945 close on Friday, GTP profit margin remain attractive. Zenith Bank profit margin remain attractive. A company that is at the end of the day, let's for example, having 35% profit margin. For me, it's a good one because all over the world, they standard that any company that has 10% profit margin is also a good company. If you see a company having 30%, 40%, that is a place to be. That means their profit margin, they're able to manage their cost. Even that despite all the cost, pressure we're seeing, inflation pressure we're seeing, that means this should also guide you. Also, a company that has a strong payout, dividend payout. Those companies that have those dividend, high dividend payout, you can see that Zenith Bank, GT Code, UCAP, many other companies also have that kind of payout. These are where because you are an investor, this is how to grow your wealth, this is how to get that wealth you are longing for. You need to know how to invest in this company, send your money and error. I was discussing with one of my friends that you see there are some people today, they call them high net worth investor. They are not having a portfolio of 8 stock, portfolio of 5 stock, 4 stock, and they are accumulating. At the end of the day, when they receive just dividend from one of their portfolio, they know they can spend that money for a whole year. But just on the dividend thing alone, plus capital appreciation can tell me where they are going with that kind of return. You must understand why you're in the market, why the kind of sector you should focus when you're investing. Strong earnings capacity with going cash flow that support payout is very, very important. Today, I'll tell you that in the banking sector, the company that has the highest gross margin is Access Bank. And Access Bank keep expanding their capacity, acquiring banks within Nigeria and outside the shore of Nigeria, just because they want to spend their tentacles where they cannot support their bottom line, their profit margin, their profit after tax. Say that these are companies that you should be targeting. When you see a company that expand them, and go and check it. Look at UBA, look at ETI. These are companies that are operating outside the Nigeria economy, banking sector. How they are doing. Look at also some consumers like Nestle, Unilever, Cadbury, that's also moving their goods out of Nigeria to take advantage of this Africa free trade zone. They are still exporting. I see this also reflecting on their number because they are selling over there in dollar because of what we are having today with dollar issue. When they come and see the value what we are going to add to them. These are the things that you look at. These companies are growing their capacity, they are growing their earnings. This is where you also be looking at to put your money. Also, the company that has relatively small share in issue, These days, like, I think that companies are doing extraditing to cancel their on issue share, because it's a law that before end of this year you should what cancel your on issue share. That means as from going on as from 2023, nothing like on issue share. The share you have, the share you have. So that people have access to the number of share you have, and use easily to kind of take decision. But now that decision at the end of the year 2022 December, every company should wipe up their on this share. That is why the day for yesterday or yesterday you saw that Nigeria Brewery just announced a bonus share of 144, because they want to give their own share to their shareholder. That's why many companies are canceling, while some are giving bonus to what to accommodate that on issue share. But I believe that when a company gives you bonus and they're unable to grow their earnings in that proportion, that would dilute their earnings. I mean, you have to be very careful when a company is giving you bonus. Also, you should also be very careful. These are the things we will be looking at when you are investing. Yes, picking dividend stocks, because I tell you, you're a long-term investor in the market. You need to think of how dividend will come and which company has that capacity to pay you. But dividend is very, very important. Dividend investing can be a powerful strategy for what? For superior return. People don't understand. Dividend, when you pay dividend and you are type that kind of reinvest your dividend, before you know, your portfolio will become boom. But do that I use your dividend to run other things, fine. It's not evil, it's not bad. But do that invest that dividend, I'll tell you, before you know, that portfolio would have overnight, you will be wondering, because you are plowing back the money, the fund you are invested is generating for you, because you have other stuff. But if you have other stuff, you are using your dividend, fine. But if you are in dividend stock, it's another way of getting what good return in equity investment. Picking the best dividend stock is more important than just focusing on dividend yield, because dividend yield of many companies are high because their prices are low. You want to know why that price is low. Is it because there's a general market downturn, or because there's a peculiar issue with that company, that's why the prices are low? These are the things you also look at. Not because dividend is high. Dividend yield is high. Also, you must find out, is it because there's something happening in the general market is high, that's why their dividend yield is high and their price is low. That's something will drive that price back again up, where you can make capital appreciation and also support their payout at the end of the day. These things are things you should know. So that you must know that the company dividend growth is constant. What is their payout? You must know all this, because total capital distribution, is from retained earnings. Look at companies that pay 90% of their earnings as dividend. So most times, they run into problem, because when it comes for them to expand their business, because they are pay out all they have. And if you take Nigeria today, most of the companies that do that are those companies where foreign investors have about 60% and 80%. They are interested in take their money back to the economy. But because of our FS problem, they are not taking their money back. Rather, they are increasing their stake in this company. I think that is why they have confidence in the economy. Yes, it might be part of it, but because they are not access to take this money back, that is why they are increasing their stake. That tomorrow will be better than Nigeria today. That's why anytime the economy becomes stable, they can take their fund, because they have invested more in Nigeria. These are things that I see that Nestle, for example, now for the past 1 year has continually kind of what we call insider dealing, buying the share back, accumulating share from the floor, buying, increasing their stake. Before their stake in the market, in the Nestle was about 62. Today it's about almost 68, 70. One day they might also buy this thing back, become 100% owner of Nestle. So I see that this foreign investors, where they pay 80%, also look at why are they paying 90% of their dividend, 95% of their dividend. It's because they want to appease the foreign holders in that company. These are things also have at the back of your mind. There are important variables to also consider at any given time when you are investing for dividend. Income investors will always want to look at this dividend, because they are pensioners. They need to have a regular income to plan their life. But also you and I that also are working, we also have a plan of getting dividend. Why is getting dividend? You can plug back dividend to investment and also do other things at the end of the day. You don't have to be an expert or a professor to invest in the equity market. All you need to have interest and knowledge and study. Once you study it, you are able to follow the trend. If you are investing for dividend, don't say I must go to school to go and study. No. As you are discussing this class, I have you to start learning, start attending some forum where they are discussing the stock market. Before you know it, you also become an expert in it. But you must not say because you must be an expert for invest. No. Start the reality you have a goal and a plan, and start rolling out your money to the market and invest wisely. Invest in dividend stock makes a lot of sense. A lot of sense for me, because you must have that intuitive when you are taking decision. You don't need to be an expert. I've said earlier, to understand why companies make big cash distribution. It shows that also the company is healthy. When the company paying you from what they are generating money, they are earning, and that company their future is also bright. That's why they are paying such consistent dividend, because they know that they have come to stay. And reinvesting also the dividend in a different way. But that also tell you that this company is healthy. Especially in a banking sector, when we are not paying dividend, the company they see as this bank is not going well. Also in other sector, that's why dividend payment is also good to assess the company. Besides that, for academic research, companies with a solid and they're going dividend tend to deliver attractive return because these companies has also shown to be consistent. That's why you need to look at them. What dividends say about company? Like I just mentioned some few. Dividend don't just provide cash flow to investor, which is a long-term advantage on its own, but drive price. These corporate actions that come at the end of the day is what moves. Right? So traders want to hear a company that is paying dividend because when they announce their dividend, the price, if it is 1 naira to move to 150, they are not interested with that dividend. Because that price movement after acquisition, they are good to go. That means able to move. That's why you see the importance of dividend. Once they come, it brings also an advantage for people in the market. Dividend payments also say a lot about the company fundamental, health, the situation of that company, the management style to also reveal to you. Companies that are also distributing increasing dividend regularly are also those companies that are consistent, also generating cash flow on a consistent because you can't give what you don't have. Your business must be generating money before you can pay dividend. That means you as an investor or trader must look at these companies that are consistent. As I said, we have about almost 180 or 185 instead. Not all you're going to invest in. Those that are leaders in that sector, which we have discussed earlier, is where to put your money. Leaders either in price, leaders in terms of earnings performance, leaders in terms of what of their market side. These are the things you should look at before you, but not just because it's a no. You know why we're in the market. That's why I say you must understand the company you're investing before you put money. Earnings and growth. These are very, very important. Earnings come from the company. Want to know company like earnings from the company, are they consistent? Are they continually looking up? For example, a company now released first quarter is 30 kobo earnings per share. Then the second quarter is 42 kobo, 48 kobo. The third quarter is 60 kobo. The full year is 4 naira. You can see that it's consistent in earnings growth. You need to understand what growth or if the earnings declining. These are things you need to know. These are tell you the quality of the earnings you are seeing or the company. You must know how consistent these earnings are going or declining. It will guide you to know exactly what to do with your decision. The importance of corporate earnings or numbers cannot be emphasized when it comes to what investing or what in equity trading. You must know that price movement of any stock is also in the short run or long run is a function of what earnings. What is the function of earnings? It is that earnings that will support either the dividend they pay out or the price movement. That's why price movement is a function of what the company's what earnings. Earnings is very, very key. And that earnings is a form of dividend also. Earnings is the short or the fastest way of assessing the company management. Like I said earlier, whether it's managed by a white man or a black man, you want to know what is earnings. Earnings will not tell you it's managed by that earnings will tell you this company is active, this company is productive, this company is a profitable company that you can invest. Like today now you can say that when you say that Zenith Bank is the most profitable bank in Nigeria, for the straight 7 years, they have maintained that their profit in that sector have made them to stand out as what. But we are seeing assets coming out because they are expanding to meet Zenith Bank and surpass Zenith Bank and hit it good. And they started already. If you look at their gross earnings for third quarter, about 960 billion. No bank in Nigeria have done that in the short market. That means at the end of this year, assets might be having a trillion gross earnings. And that will be the first, and that also change perception for assets. These are things, you must know company earnings that will support the payout because they will give what they don't have. That means you as an investor must understand these companies that are performing well, that are doing well in terms of earnings, and also key into that position at once so that you can take advantage of that as you speak. This is why investors need to know the business behind what the numbers. Like I said earlier at the beginning, you must understand the business model that will help you to understand the kind of earnings that you see on different seasons. Because investment is about season. If that season, what comes to have any season, have a market event. This any season will tell you what will happen that any season or any different season. Like I mentioned that this period now, in the last quarter, will be the end of the year. Activity because of festival, which companies, all those food related business will benefit from it. For me, you need to put all this into action. Whether there is season or no season, people that are into petroleum and energy, they make money in all this because you need it. So you can see that whether there is season or no rain or no sun also, you can see you must understand the sector you are operating and the business model and what is behind that company. Once you're able to identify that, you're also good to go. Identify earnings quality, which I have briefly explained. Look for the companies with quality earnings and growth and value. Since price movement is a function of performance in the long run, it is It is the quality of company earnings that will attract big and smart money. Why I mean smart money? To this end attracts foreign investor and institutional investor to the market, especially the PFAs. When they see these earnings, they keep quiet. Now that they're all seeing the Q3 numbers, they are not to the market. They're still doing analysis. I remember in the last week now, or few weeks, I was seeing that individual stocks have done well. We're seeing improved volume in them. So that those institutional investors or high net worth are still taking position at this time, but their prices are low already. This thing you should have in your mind that something is pushing the price. We are seeing volume in the stock, say that something is happening in that stock. Because it is the most important factors when analyzing what a company earnings is key. That's why you must look at the company earnings and what they are into and the model of their operation. At the end of result of every input of other factors is what is earnings. I mean, whether you are increasing your product line, you are creating a new one, you are buying another company, you are acquiring a company, you are merging. It is what the earnings that people are going to look at the end of the day. That acquisition has impacted your earnings, and your numbers improve. These are the things we want to see. Whether you are producing new product, you are in acquisition, these are the things investors want to see at the end of the day. Yeah, like I said, you want to really know how to know a good company in terms of their earnings. That's why I brought this on this table to guide us for in this summary. What is important is that the top line of a company or the revenue or the sales, whatever you want to call it, you must know that that company, either on a quarterly basis, their sales growth must be 15 plus. That means 15 can be a 20 and all. That means once it's 15 plus, then that is a good word, a good movement. Either for a quarter or annual sales, also 15 plus over 30 past 30 to 5 p.m. You must have it at the back of your mind. The earnings, which is the profit after tax, which is the bottom line also, or what you want to call it. This earnings is determined what you pay, because in between the sales and the profit after tax is a cost of operation, cost of sales, government tax and all those stuff. But when they are taking care of what is left for them is called the earnings. But that from earnings determine what we pay as dividend. That's why any per share is very, very important. It gives you insight what the company will pay at the end of the day. Especially once you know that the company are taking care of costs, they are paid government, what is left for you and I as an investor in that company. Also, I mentioned about profit margin. Profit margin is very, very important. It's key when it comes to investment. A company profit margin, I said profit margin that are increasing on quarter should be no less than 10% plus. That means you are seeing a company giving you 42, 50, 35% profit margin. That's huge. Then that in every 1 naira they are making sales, I think about that 30 kobo or 40 to 50 kobo for profit. For me, it's a good company. These are what I mentioned about UCAP. Also, profit margin also that on increase on year. The same month also not less than at least 10% plus. That is what. Then also we must look at the quick ratio. It's a assets over liability. It must also be 1 or greater. When a company is having anything below 1, say that to meet their short-term liability or short-term activities of responsibility is very, very very, very important. What they enable that means the company is also not strong. But when a company can meet its short-term liabilities and others, and when it's below 1, I mean company is struggling. But I believe that now what they call Nigeria bill is coming off fast again. Before now, previously Nigeria bill has been struggling. That's why their quick ratio was below 1. But now it has come back. They are back. That is a people of assessing what the company book is, what the center of their balance sheet and all those stuff. You need to understand this together. But one thing that is very, very important again is cash flow, operating cash flow. When a company operating cash flow is looking up and the earnings is looking up, as a number for the company, that means the company can sustain that earnings. I mean, talk about sustainability of earnings. But when a company earnings at the end of the day is looking up and cash flow is looking down, it's a matter of time it will reverse. Put it at the back of your mind. It's very, very important. Look at company cash flow. That is why in financials of a company, you see the profit and loss account, see the balance sheet, and also see the cash flow. That cash flow, many people don't look at that cash flow. Cash flow will tell you if that earnings you are seeing, that balance sheet you are seeing is going to be sustainable. That's why cash flow is very, very important. Go and check whether the company cash flow is looking up as earnings is looking up. But if earnings is looking up and cash flow is looking down, then you have to rethink and watch to see the next quarter or the next if that trend has changed or not. If you continue, you have to be very careful. That means the company earnings will be sustained, because if earnings is going up and cash flow is going down, it's not a good news for that company. Put it at the back of your mind. Finally, for this table, we're looking at return on equity. And this is the important thing for every investor. These are the key investor want to know how the money they invest in the company, how are they utilizing it. That's why I say return on equity. But once they say at least 15 plus or at least 16 plus, for me it's also good one. So today they are seeing some companies that are giving you 30% return on equity, which is good, and 20% plus also capital appreciation. I see that you are making good returns. For me, these are how to invest in the market and invest also wisely, so without guessing. Because once you are investing with knowledge, you are good to move fast with the market and you understand. None of that panicking. You have information. You are not panicking because you know what you are doing. When looking at a high quality dividend stock, these are the following you should do or you should consider. Look at the company size in terms of what capitalization and profit level. Since smaller no stock, no capital have what a higher no expected return. Those companies that have small share in issue, they can pay high dividend. That's why I can see dividend from total. These are shares that the share issue is less than 500 million. That of Nestle. Most of the company that has they pay you higher dividend. Also look at that to see, and also look at what their dividend policy. Are they the type that increase their policy every year, or they don't pay once and do not pay the following year? Companies that are consistent, their dividend payout and they pay on incremental every year, either from 2 naira to 220 kobo, 220 to 240 kobo. These are companies that you should be targeting when you are investing, because there's strength for that company to continue to expand their worth, their dividend, their payout. Also, in addition, dividend yield has a, like today now in our market, I'll tell you, because of low prices, the average dividend in the market is about 7%. And I tell you, 90 days return on treasury is around 6%. You can see about 6 or 5%, and that of 180 days. I know that for 364 days, about 13 or 14. But you can see if the average yield dividend in the market today in our market is 7%. I mean, if you can get that capital appreciation about 20%, you are moving, or 15%, you are moving inflation. That's why I say it's only stock market and property that you to work to edge inflation as we speak now. You are putting money for long term in equity in a fixed income market, but just because you are not a risk taker. For me, you have a negative return already because your return is below what inflation. But if you want to edge against inflation, the stock market and property you can use to edge against inflation, because with dividend yield and capital appreciation, and also most companies that are past their high cost to consumers, and they're putting good number, that good number will support their price and their payout, will support their work, their price at the end of the day, and you are making money because they are paying you high dividend at the end of the day. That's the thing that we should also have in mind. This is not about an exceptional high dividend yield, but for you to focus on dividend quality. What did they pay? What the size of money pay? It's not that dividend is high. You want to see what do they pay for compared to their price, and also is it regular? These are the things that you have to look at. Also, nevertheless, make sure that that dividend yield is above the average, and above the average is 7. Now, I tell you that some companies today that have 14% yield in our market, 14%, 30%, 15% yield on dividend alone. So that company that has 14% yield on dividend, if you make 20% of capital, that's about 34% return. In the short time of between now and April, see how you can use the capital market to hedge against inflation. These are the things we are also saying. As a reference to the average dividend yield for the companies on the exchange, you can see that in between what I mentioned earlier, currently between 5 to 6, you can see that 7 above. You can see once you get it, you are good to also go when it comes to dividend yield. Also, dividend that is standing up is more important than dividend yield. Like I said, when a company increase today, they pay you 5 naira, the next they pay you 8 naira. You can see that up movement is also better to see that the yield also is better, but this one is most important because we are seeing a jump up from what the previous year. And these are the things that you also look at when you are investing. Even if the dividend remain stable, and if the dividend remain stable, the dividend yield can also increase because of what the stock price is also falling. You can see also why the price is falling. That's why once you know that it's because of market direction or because of what is happening, don't point because that's that it will bounce back again. Your position will come there. You think also the yield because of what they're going to pay you if the company is doing well at that particular time. These are the things also you want to have at the back of your mind. Besides dividend growth, that provide an important information about the company's financial strength. That the management level of confidence is also guiding about the company future business. These are the things to look at. When you see a company that paying dividend, say that they have arrived. That's why they're between a growth company and a value company, a beauty company. Good company are consistent and they have come to stay and they pay dividend. But a good company don't pay dividend because they want to plug back their money back to the company to expand without the type of world. When they are paying their dividend is very, very small. That's why between a good stock and not those blue chip stock or value stock, because those companies pay high dividend than the growth stock. Growth stock want to plug back their profit back to the company. Why those beauty companies that have come to stay want to pay their profit afterward to the investor to say thank you for the confidence, and also to that we are healthy, we are making money. That are the things you want to see in this company. It's very, very also important as a investor. These are the things you want to also know to guide you when you are taking a decision. The company history of dividend payment is clear, but also very, very important too. However, you need to know it. Also, know it is ability to sustain this growth in the future. It's also very, very crucial, very, very, very important. Even more important because you have sustainable. It's very important. When I say I take you back to say about the company cash flow and what at earnings. When the company cash flow is declining, how will you to sustain the dividend? And you have your sustainability in your cash flow to support your dividend, to support your earnings that will create and support your dividend. That's the relation between them. Your cash flow is looking up, earnings looking up, dividend will look up. But when cash flow is coming down, the earnings coming down, dividend will also come down. You must understand this is very, very important. In that spirit, dividend payout ratio is also very, very important. Company that pay dividend like below company that pay dividend payout, their dividend payout ratio is below 60 and 60 for me, it's okay. But when it's above the you can't guarantee continuity. But when it's 60 or below 60, I'll tell you like today now, Zenith Bank and still think that dividend payout between 50 and 58. Look at all those companies, all those good companies. But those that are paying 95, 98, that are wrong, that have the external investors, the foreign investor having the highest share in that company, it's because of those foreign investors that are paying that. At times it's not too good for them. But at the end of the day, they borrow to also to expand their business. But when you have kind of a period that can also claw back the money want to expand your business, to give your investors more confidence that the business is going down. They're paying the business out at the end of the day, you go and borrow and be paying and be paying interest. Now that interest rate has gone up, companies that pay out all they have a dividend and they are borrowing now at this high cost, going to affect them. That's why most companies have to retain their earnings towards for expansion in the future. Finally, picking dividend stock is very, very easy from what we have discussed today. Among the companies that met our criteria as stated above, 4 to 8 stocks, with a high payout should be your portfolio. You don't need to have Babajantis and all of them in your portfolio. You must have this few stock, minimum of 4 and maximum of 8. Many young companies growing their earnings and driving price above dividend yield is because when the market is good in the market, these are called growth stock. Those ones are actually good again, or they are paid dividend for access. Access is not paying as high as the DT code or Zenith Bank because access is still a growing bank. This time a value bank because of the expansion, they're not paying more. These are the things we are saying that dividend is very, very important, but we need to know where they are heading from that position. As the company matures and cash flow is also more stable, dividend also can be predictable and over the time, and that's also good for you as an investor. This means that the companies with few shares in issue today will pay more dividend tomorrow because they have only few people to work to pay. For example, in a family that have 12, they want to share one chicken. 12 people will be sharing. Why the family that has 3 sharing one chicken can see dividend? That's why when a company have a small share in issue, they pay you high dividend. When they have more share in issue, they pay you later. That's why company that has small share in issue is also a good product to look at whenever you are investing. You need to understand this. Like I said earlier, that we're going to also discuss those stocks that you need to look at. The 10 blue chip stocks and the 10 growth stock to drive NSC recovery. Market has tried to recover now because market already at oversold region, trying to look up. And these earnings that we're discussing are sustain the market. If not, market have gone below this level. But because earnings that came for third quarter are impressive, market got stable. And we'll see that after the MPC meeting, but next week, there will be change in the market. And that change will be very, very good for investors who to take advantage. That's why you take advantage of this low price you are saying now. Those blue chip companies, for you to look at. That's why I put them here for you to also guide you. Zenith Bank, GT Code, which is the bank, then Dangote Cement, MTN, Lafarge Africa, etc. Depending on your investment, but these are stuff we're done. You want to meet your investment goal, go ahead and pick them. These are for the blue chip. But for those companies that have good potential, that's who go is UCAP, Vitafoam, GSK, Me and Baker, Accra Prudential, Dangote Sugar, Stanbic IBTC, Fidelity Bank, Etana, Fixing, and World Cup. Julius Berger, Julius Berger will always be there. Why? As far as we have particular group and all those companies want to control today, you can see what the guy is doing in Port Harcourt. You also see the results. You understand that these companies have business they need to do because what the activities they're having now is coming from within the economy because we have that particular gap. We need to meet up. I mean, this kind of company like Julius Berger, Lafarge, WAPCO, and also Lafarge, Dangote, and Bua. They are meant to be on demand for that. These are because we are sure that what will support their earnings is already there at this moment. For me, These are how to go about what about investment. But here, have in mind that one, greatness is not achieved with 15 to 20 stock portfolio. Like I said earlier, you must reduce your portfolio to what a handy portfolio that can look at, look at it and move ahead without taking all the 20 stock. No, and instead of being having it back more volume in those 4 or 8 stock that I'm having 15 to 20. That's what I mean by that. Beware of volatility in common tiny stock. There's some stock that, because there's no movement in them, people are not buying them, they remain flat there. Don't put your money first because it's going to tie you down. And in generally, I mean that stock with what with average daily volume of what less than 500, and these are less than 20. Volume of less than 500 shares, and these are less than 20. Don't put your money because they are thin, also they are risky. Don't put your money in such. Beginners should not buy stock with borrowed money or margin facility. Know that the risk is high there. But when you have experience, you have that you can go ahead and work and borrow to invest. But don't borrow to invest at this level because you are starting. But if you're already in the market, you understand it. But now interest rate is high, I will still advise don't borrow now. Just come down again. But now interest is high. Many traders are not borrowing because for you to cover such in your trading, it will be difficult. That's why don't borrow money to invest for now. But I use your money to trade that you're able to have good sleep at the end of the day. And lastly, before we round up the class, leverage on what? On your own money. I get again here. Leverage on your own money. On your own money. Your own money. Only your money only. Leverage on it. You have also some training and experience on that bed. I've mentioned that one several in this class. You must have knowledge, education about the market, training how to do investing. And then don't jump in. Those others are doing flowing bad wagon. No. You must have understanding what to put your money. Also, you must be disciplined and also follow the rules. That's why you have your plan. That plan is towards rules to guide you. Follow your rules at any time. You have to work. You have proven that you can act fast and also cut your loss at any time. This cut loss is very, very important. You enter a stock, especially for traders and the house, you buy stock for 4 naira, and you know that your stop loss want to 4 naira, 30 kobo, 4 naira, 50 kobo. Set the stop loss that what's stock there, you're going to get that. Because I can move that money to another stock. But if you don't know what to do, and the stock is going down, go as low as 1 naira, 2 naira, you have lost huge, and for you to get it back in another position, that's why you cut your loss on time. You can manage your portfolio easily and also manage your risk and protect your capital. It's very, very important. On this note, I'll say thank you for your time and I appreciate your listening. Questions, let's flow, or you want to add anything, let's go ahead also and discuss before the end of the meeting. Thank you all for listening and God bless you.
All right. Thank you very much, Mr. Ambrose. Omodio. Thanks very much for this enlightening session. Okay. We currently do not have any questions in the chat box, but I see some people have their hands up.
Okay.
Jeffrey Whiskey, your hand is up. Do you have a question, please? Jeffrey, I can see your hand is up. Do you have a question? Or if anyone has a question for our speaker today, you could just please unmute your mic. And okay, you have some other hands up. Chijoke Chikwindu, your hand is up. In the absence of Jeffrey, could you ask your question? Hello, Chijoke, can you hear me?
Yeah, my question is this: when selecting stocks, particularly dividend stocks, is there an app or a screener or some software that could help us in stock selection? Because we're talking about things like earnings per share, high yield, and all of that. Is there any particular screener or an app or something that will help us, to put in these parameters, and then we come up with maybe out of 180 stocks, you can now come up with maybe 5 or 6 that match the criteria we're talking about here.
Okay, a good question. I like that. For our market now, I think we're coming up with an event data. We're coming up with that, kind of a trainer now. I even come that give you good earnings per share, good P ratio for you to invest. But I'm not done with it. But for Nigeria market, I've not seen full. Let's to Nigerian Stock Exchange, you can see them in number. But for trainer, I don't have one now in Nigeria that are doing it. But if you go to other mature market, I think the access there, you can see they're both their own market. If you enter online now, you can see trainer for some US. But for our market now, I've not seen much on that screening to tell you whether this P ratio is good for. But I'm telling you from the experience and what we use for investor. That's why we're also developing our own app that will tell you that when you enter, click into it. But with time, before this time next year, we are done with that, so that everywhere you are in the world have access to all those trainers and get access to what you need. But that is the best way to do. Instead of taking time to analyze them one by one, like you just said, 180 stock, it's a big but it's still small because in the US there are about 4,000 listed companies. We are just having a one less than 200. But still, we're working on it with time to come. But why it's very important that we're not going to invest in all the stock. Once you know the company sector where they're operating, look at the leaders there. That will also help you reduce your work. Once you're looking at the leaders, look at leaders, what is their dividend payout ratio, what it looks like before you can now jump in on app for dividend income. For capital appreciation, dividend is just to support your price movement. These are the two things you should have in mind in the market. Once you are investing for dividend, you want to take the cash, but for you as a trader or other people as a trader, they want dividend used to drive their price up and they can now take capital appreciation. But for those that want dividend, they want to see, who can have dividend yield? You can see the dynamics in the market there. Because your investment objective or what you are paying in the market will also help you to that's what to do. For now, we are working on it for our market. I can't see, but I see people mostly stop them on their floor on their side with that. But whether there's a scaling attack to that, I don't know for now. When I find out, I will let you know. But for before this time next year, we'll have a trainer on our own site, investdata.com. It's all of them. We're working on it already. On it.
All right. Thank you very much for your answer. Thank you, Chijoke, for that question. Does anyone have? Okay, we have another question on the chat box from Mr. Bonaventure Ani. How can one key into the Nigerian stock market in terms of platform and processes to open a trading account? I read the question again. How can one key into the Nigerian stock market in terms of platform and processes to open a trading account?
Okay, and I think this is a very good question. Our market has gone online. Most of the stock broking today now in Nigeria can trade from anywhere you are in the world once you have access to their portal, because they have access to sell on your phone, on your laptop. That means what you will do after the class, if you are interested in opening an account, I can tell you a house to feed their form online. You can just figure that, then you have access to your account, or you need to also have knowledge of how to trade online. And most of them, once you open an account online, they give you like a 1 hour training on how to buy and sell online too on your own. But if you have a house already that you are using or you want to start any company that is listed on exchange, that is a member of that stock exchange, so that you know that you are safe. You must be a member of Nigerian Stock Exchange, or that company before you can open an account with them. You can do it any company you like, but if you want us to guide you after the class, I can give you a stock booking from where I trade for my clients. And also you can already have access. They can open it online for you. Whenever you don't need to come to the office, go online, fill your form, it's open, then you now start finding start trading on your own to buy and sell from anywhere you are, on your mobile phone or your laptop.
Okay, thank you, Mr. Ambrose Omodion, for this enlightening session on the Nigerian stock market. Okay, I think we will take the last question now before we go. For those who want to get across to the speaker, we will share the materials and you will find his contacts in those materials, so you can get across to him also. Let's take the last question from Chijoke, please. Go ahead, Chijoke.
Okay, sir. I just want to make a comparison or ask if one has to choose between a high dividend paying stock and a stock that has potential for capital appreciation. For instance, maybe it's undervalued now to the tune of maybe 40%, and you know that maybe if you buy it in January, for instance, maybe by July, you're likely going to have a price appreciation up to like 40%. But in terms of dividend yield, it may not be that, you don't have that kind of, the kind of percentage you're talking about. Would you say that we should still go for a high dividend yield stock and not a stock that has capital appreciation if you're going to compare the two? Hello?
Yes, I got you. I don't know, Mr. Ambrose, if you got his question. Hello, Mr. Ambrose. Did you get his question? I'm sorry, Chijoke. I guess he didn't get your question. Mr. Ambrose, are you still there? I think for those of us who are here in Port Harcourt, okay, Mr. Ambrose has left, and it's also raining seriously. Okay, on that note, maybe Chijoke, you will see his contact in the slide, so you can send him a question. On that note, I want to thank everyone for taking out time to connect tonight. Thank you very much, okay, for taking out time to connect. I will share the slides. If you want to get the slides, please click on the WhatsApp group that I put in the chat box so that you can receive it. So thank you very much, and do enjoy the rest of your weekend. Thank you, Mr. Babatunde. Thank you, Bonaventure. Thank you, Chijoke. Thank you, Chinagoro Muche. Ogide Chukwemeka, thank you. Victor Oji, thank you. Colin Sudano, thank you. Wami, thank you. Mrs. Emefene, thank you. Sule, thank you. Gabriela, thank you. George, thank you. Harold, thank you. Ibukun, thank you. Thank you. Arinze Ifekudu, thank you. Inyobong, thank you. Jeffrey, thank you. Jerry, thank you. Yomi, thank you. Margaret, thank you. Morgan, thank you for coming. Shola, thank you. Olisa, Wama, thank you. Oluchi Ohanele, thank you. Petrus Siedibo, thank you. Rose Uja, thank you. Roslyn, thank you. Pastor Sabi Onibo, thank you. And Amadi Electrical, thank you very much. Okay. So thank you very much all for coming tonight, and do enjoy the rest of your weekend. We will share the slides later on. Thank you very much all for coming. And Ebovie, thank you also for coming. Do enjoy the rest of your evening and your weekend. Thank you all, and bye-bye. See you third weekend in December 17th. Bye-bye, and God bless you all. Thank you.
Thank you, sir.
Thank you. Thank you, sir.
Thank you, sir.